and welcome to the Montgomery Small Cap CEO series. This is the second of two videos we've done with Simon Owens, CEO of Ingenia. And today we discuss Ingenia's strategy for profitably growing alongside the great investment theme of Australia's aging demographics. Big opportunity in the long run because we're all getting older, and Australia's population, I think, as you pointed out earlier, is also getting older. So what are you doing to capture that growth? Are you increasing supply of homes on your sites or adding more sites into the portfolio? Talk us through your strategy to grow the business on the back of that demographic trend.
Yeah, look, our business really meets the convergence of two, what we would call mega trends, being the aging of the population, and also the housing affordability. Is probably one of the top couple of challenges that governments in most nations now have to face. So our business model really uniquely meets both of those. In Australia, there's around somewhere between 2,500 and 3,000 new homes in this lifestyle space being delivered every year. Ingenia has by far the largest development pipeline. So we're not only, scouring the market looking for existing communities that someone else has built to buy, but we're also the biggest developer of these communities. So as I was noting previously, we have 9 communities currently in various stages of development. We're about to start a new community down in Victoria very shortly, and I would imagine in the next 12 months, we will be commencing another 4 or 5 communities. And several months ago, we announced that we had acquired the largest approved development site in Australia for one of these communities, which is located about an hour and a half north of Sydney in Morisset. So we'll be breaking ground there within the next probably 6 months. So yeah, we're really growing our business through buying existing mature communities and also accelerating our development. And I would see over the next 4 or 5 years that we started developing these homes back in 2014, and in our first year we sold 12. For the year that just finished in 30 June 2020, we sold 330 homes. This year we're probably on track for somewhere between 350 and 400 new homes, and each year we would like to build that number of homes that we're delivering by somewhere between 50 and 100 per annum. So the market is incredibly deep, just given every day in Australia around 650 people turn 65, and that's going to continue for the next 30 years. So a massive runway of opportunity in front of us.
And the balance sheet position of the business, you raised capital earlier in the year. I mean, I go back and look at the history of your financial statements. It looks like the balance sheet position is in as good a position that I've seen the business is in. And I recognize that industry conditions have probably changed a little with COVID. That leaves you with potentially capital on your balance sheet to deploy when others may have had a tough experience through COVID. Is that how you see some of your growth coming about, funding into some potentially good acquisitions?
Yeah, Gary, great question. So going into COVID, sort of in March, April, Ingenia already had a very strong balance sheet, but we did make the decision in early May to raise capital, to raise $175 million. Not so much to protect the business, because as I said, we were already in a very strong position, but we did feel that COVID would wash out or cause a lot of market dislocation. That opportunities would present themselves that otherwise may not be there, and we wanted to make sure that we were really strongly capitalised to take advantage of that. And we probably haven't seen as much market dislocation as we were expecting, but we're definitely seeing some of our competitors withdraw, slow down development, or ease back on M&A. So yes, we would expect that $175 million of equity plus an equivalent amount of debt, that all of that capital would be deployed over the next 12 months through a combination of acquiring existing lifestyle communities, optioning up and acquiring new land to start new communities, and also we have 3 holiday parks currently under exclusivity or under contract pending finalisation of our DD. So yeah, the market's very ripe, and we're moving very quickly to deploy that capital as prudently as we can.
So there we have it. Ingenia well positioned today for the surge in domestic travel activity, but crucially also leveraged to the strong medium to long-term demographic trend of Australia getting older and offering strong, profitable growth potential. Fantastic, Simon. Thanks for your time.
It's always great to have a chat, Gary. Thank you so much.